Hey everyone, welcome back to CryptoCache. Thank you very much for joining me here. I hope you're having an amazing day. We're going to take another look here at Bitcoin, of course, help us understand best practice, big picture, see what's going on. And we're going to take a look at the bigger stuff here today, the more so the macro, kind of give us an understanding of, well, obviously a big picture, but truly try to look at some trends in the past and help identify how much lower this could go. Because I think it's just getting started. We're definitely on a downtrend. I mean, there's a great chance that 35,000 could be the bottom, but there's also a great chance it won't be either based on what we've seen here recently and this downward trend continuing. All right, so again, keep that in mind. Bear in mind also, altcoins do have a tendency of spiking when Bitcoin dominance continues to decrease. So there is obviously a potential shift there as well where we might see some alt season, for lack of better terms, here sometime this year if Bitcoin continues to digress, because a lot of that money is going to come away from Bitcoin and go into these other altcoins. So we're not in dire straits by any means, okay? That being said, not a financial advisor either. I hope you can learn something here today. My goal and my passion, of course, is to help you become a better trader. And obviously, I have a trading community, academy, and signal group. Most of you that watch are aware of this, but if you are new to the channel, consider checking that out, CryptoCache.tech. I provide you with signals that I send for every single trade that I take. We've been shorting a lot recently. More importantly as well, though, is I have a trading academy that I'm constantly adding content to help you become a better trader. So you can teach yourself, essentially, or I teach you through that medium. That being said, take a look here at Bitcoin. Big picture, let's go ahead and start with the monthly and go with kind of a big picture. I wouldn't say, not necessarily worst case scenario, but just actual case scenario, and help us understand generally what this means. Now, on the monthly, we can kind of acknowledge, and we've touched on this before, we have a pretty significant MACD divergence since January. Now, obviously, it's coming to full head, and we haven't had this happen in quite some time. In fact, we haven't had a MACD divergence since July of last year. So generally speaking, unless you take a look back here at July, which if you consider July of, 2018? July, here we go, right there. So this is right where the MACD swung downwards. And if you can see, it decreased quite significantly. Let's see if we can get a little bit closer here. If we look at July, all the way to its lowest point, that was about a 60% correction. Okay, now we can kind of compare that with this right now and kind of see where we're at. Let's just say even from the highest point, how low have we gone? We've gone about almost 50%. Okay, now granted, if you consider 60% from the most recent high, which we might be in, that would put us somewhere in the range of about 20,000. Okay, so again, if we kind of see that same amount of travel, that same percent coverage, so to speak, from now, from before, if you compare that time frame roughly, which is almost exactly 4 years ago, then we can see that this downtrend could and should likely continue further, right? So again, that's just kind of a theoretical thought process there. Obviously everything you look at is theory, right? But generally speaking, we saw a pretty significant divergence there, and of course it came to a head right at about 3,200 and came right back up. So we could very well be in this area here right now in the current cycle. Another reason why that's possible, excuse me, is because of the fact that the 20-day simple moving average, because one of my admin brought this to my attention, the 20-day SMA is we're down below the 20-day SMA now. So if you look on the monthly, we're below the 20 here, and coincidentally here, right at the same time we had the MACD divergence, or within about a month's time frame, we can see the price shot down below the actual moving average to 20, okay? So that would put us hypothetically right at this point where we're seeing this significantly large candle, and if this month closes largely red, we could have 2 or 3 months left of continuation of the downside, followed by a swift recovery, okay? So we could literally be about 2 or 3 months away from a return fire, a shift in momentum upwards, or we could not be. Obviously, these are just, potential options and no guarantees, but that is kind of interesting how the last time it dropped below 20 on the moving average here, the SMA on the monthly, we had a MACD divergence happen just prior to that, roughly 2 or 3 months before. We've had a MACD divergence 2 or 3 months ago, actually more so 5 months now, and we could be partway through this downtrend only to inevitably bounce off of 20,000 or higher. Again, that's a worst case scenario. It may not do that. Again, 4-year cycle. has proven to not be 100% legitimate, but on the same accord, there's interesting behaviors going on right now with some of the moving averages and the overall sense of the fact that we're below some key level resistances, and until we break back above that, it's going to be bearish for the moment. All right. So again, just something to kind of consider. We also want to acknowledge the fact that we're testing 50 on the RSI on the monthly, which is I wouldn't say it's not a good thing, but if you look in the past, the same exact thing happened when we had this dip underneath the 20-day SMA. So coincidence? I don't know. You could say so, but also interesting how these things are all kind of adding up. So again, that's the monthly there in that sense. Taking a look at the weekly, we can go ahead and kind of just look at some of the obvious stuff here, the kind of standard stuff. In other words, we do still have a MACD divergence, of course, on the weekly. We know this. We've seen about 5 weeks of downtrend, not able to break this descending pattern. Okay, so just keep that in mind as well. We have this descending pattern, and it makes perfect sense as the fact that this bear flag is essentially coming to fruition and basically breaking to the downside as they usually do, right? So that's generally what's going on. So again, a lot of stuff here is pointing down. There's literally nothing that's really positive in the sense that we can expect an immediate turnaround. Now, yes, we're going to see some relief rallies. Price wicks down to 35,000, we're going to see it come back to 36, 36 and a half. It wicks down to 34,000, we'll see a bounce back. So you can continue to maybe add to your position as it gets lower, but we might want to wait a little bit longer to get that full-on confirmation that the bottom is in. Because once again, as soon as we lose 36,000 here, kind of like the more recent low, which we're pretty much right there, then we should and very likely could see 30,000 as the next potential target. We'll look at smaller time frames to identify that, but generally speaking, there's not much positive on the weekly or monthly time frame. In other words, the macro is full-on bearish. We need to acknowledge that. All right. Now, it's not to say we couldn't see some shifts in momentum, some turnarounds. There could even be breakouts potentially. We could see another strong push up like we saw after the Fed meeting. Right. We could very well see that. So expect the unexpected, I would say. But generally speaking, if we look at this trend line here, you can see it's moving concurrent with the 20-day SMA, but it's also testing key levels here and keeps coming down. So I wouldn't be surprised if we continue to go sideways to retest, just say 38,000, 37,000, somewhere in there, and then the price continues to digress from there. Just to continue to fulfill this pattern. So once again, patterns repeat themselves, but they don't have to. Okay, I know that seems like a complete paradox or whatever the term is for that, but I can tell you that until this trend line is actually proven to be broken. In other words, we get a solid close above for a few days, perhaps even a week. Then at that point, we can start to celebrate and continue to anticipate the price may be coming back up. But every time it's tried to come back up through this trend line, it's getting rejected out. Okay, so again, it's all right here. We can see it pretty clear as day, and we just need to be realistic in the sense that a rally back up to 40 or 42,000 right now is very unlikely. Okay, again, just based on the overall sentiment of what we've seen so far. Taking a look at the RSI, we got rejected by 50 on the RSI. We saw that recently, of course, so that is never a good thing. I like to see a price point above 50 on the RSI to give us that kind of bullish convergence. So we had that bullish convergence previously here back in March, where the price continued to rally back up to 48. Until we get back up over 50 on the RSI on the daily, I would not be, I wouldn't be convinced that this is turned itself around. And again, even if we get back up over 50 on the RSI, that still doesn't mean we're back in the clear. It does mean that we might see a potential relief rally similar to what we saw back here in March, but once again, that still remains to be seen. I don't think we have enough momentum now at this point to do that. There's just significant bearish divergence. You can also see a very large candlestick from yesterday, a significant amount of volume, but also it's considered a bearish engulfing candle. What it is basically, this open and close is higher and lower, essentially kind of encompasses it, engulfs it, and that's referred to it as a bearish engulfing candle. So that's oftentimes a sign that you'll see a shift in momentum. So we saw it here as well, here, and the price inevitably comes down. So we could very well see a retest of 38, but the price will likely come back down to 35 or lower. Again, just based on that sentiment well. All right, so that's kind of where we're at there. We obviously have a MACD divergence as well on the daily. So monthly, weekly, and daily are all screaming bearish divergence. Just keep that in mind. Moving on to the 4 hour, also the same scenario. We can see prices below all moving averages. We are testing 30 on the RSI. This is our potential only saving grace here. In most cases, when you see a 30 on the RSI, you can expect a slight recovery. So we may anticipate the price come back up to 38. I would say 38 is probably the best case scenario here based on the Fibonacci retracement levels. But generally speaking, oftentimes the price will waver in between these two areas on the RSI. So until we get back, up above 50, I would not be convinced. Even if we break above 50, it doesn't even matter. Honestly, we're so low at this point that it would be surprising if it went lower, but it also wouldn't be surprising at all based on the overall sentiment. The market is on a downtrend. We're seeing that happen. I feel that between now and November, we're going to continue to see this kind of tumultuous behavior. And a lot of that has to do with the election. We see bearish divergences or bearish markets in most cases in the last 2 years of a presidential time frame. In those 4 years, the first 2 years are typically bullish and the last 2 years are bearish. So I would expect the remainder of this year to be some kind of messy, for lack of better terms, where we're range bound between however low it wants to go and back up. And once again, if we go back to the monthly here, just to kind of touch on this cycle here again, it's not guaranteed, but if we are right here, hypothetically, we've got at least 2 more months before the price will likely find its bottom. At that point, we could expect and anticipate a very significant rally, which would put us right at November for the election. Okay, so again, a lot of things that could and should happen, but it's hard to say. Anyways, looking pretty good there in that sense as far as the price continuing to progress down and the overall sentiment being completely bearish. We've seen nothing here that implies that it wants to turn around, except that we're a bit on the overextended side in the 4-hour RSI, and that the MACD is starting to lose its momentum, and we could see a shift to the upside soon. So again, if you're going to play 36 to 36.5 or 37,000, that might actually work. But I would not take a long position at this point unless you're confident on how much higher it's going to go. But banking on all that macro behavior coming to the downside and just trying to buy the dip, so to speak, is not a great call. So I would just kind of sit on the sidelines and wait. We're going to be able to find a good opportunity here soon, but it's probably not going to be in the next couple of days. All right. We might even see some relief this weekend too, once again, to test 37 or 38. If that happens, try not to get too excited. We need to start making higher highs and higher lows on the 4-hour and the daily before we can get any type of shift in momentum. Okay, it's significantly bearish right now, and we need to acknowledge that. No use really looking at the 1 hour because this is just going to go ahead and tell us kind of the stark reality here that we've come all the way down to a 9. We got a reset. We're going sideways. And for the most part, we shouldn't expect the price to recover. The only saving grace we have, once again, is the 4-hour being extremely overextended at the RSI. And typically, if you look at its history, when it comes down to 30 on the RSI, it does have a tendency of shooting back up. Okay, maybe not all that significant. I mean, look at this here. This was only about a 3% increase. And of course, back here, we're looking at about a 5%. All right. So once again, that could mean we might see a 3% increase to about 37,000. Best case scenario, 38,000, but I think that's kind of a stretch at this point. All right, so that's kind of where we're at here. I know I've kind of rambled on about a lot of different stuff here, but we're going to start focusing more so on the macro behaviors for Bitcoin just to ensure we can kind of stay ahead of things. Because at this point, it's good to dollar cost average, don't get me wrong. I'm still dollar cost averaging myself. But that's because I'm always constantly adding more money to the market. If you don't have that opportunity, then dollar cost average a little more carefully and make sure that you're adding to your position only when we get confirmation. Right now, we don't have confirmation that the bottom is in yet. Okay, so why not wait it out a little bit longer? And try not to FOMO in when you see the price rally back here in a little while because it's inevitable. You always have the ebbs and flows of trading. But again, we've established the bearish divergence. It's pretty consistent. We need to get on board with that and just acknowledge the fact that we could see a price point much lower than 30 than 30,000. I feel like 30,000 will probably be close to the bottom, but once again, if history does repeat itself, we could see somewhere in the range of 20 to 25, right in that range there. 24 is a number I hear a lot, and that could actually be a very, very stark reality if we were to lose that support at about 30,000 from previously last year as of, I think it was June or July. So again, interesting stuff here, but try not to get too worked up about this. This is pretty standard. I mean, you can make just as much money on the downtrend as you can the uptrend. So again, I know a lot of folks are in at 60, 70, 68,000 for Bitcoin, and that's unfortunate. But if you can keep adding to your position at a lower price point, that average will inevitably come down. And once again, Bitcoin is inevitably going to increase in value over time. Supply and demand is a real thing. So just try to acknowledge that, yes, while this kind of sucks, it's not the end of the world, and we'll bounce back from this. Years down the road, we're going to be like, wow, okay, I'm so glad that I did that. And what I mean by that is dollar cost average whenever possible. But once again, depending on your overall situation financially, you may want to consider waiting longer to dollar cost average based on the simple fact that 36,000 is probably not the bottom. All right, that's kind of what we're looking at here so far. So that is where we're at. I hope you learned something here today. Of course, you want to become a better trader, benefit from some of the short signals we've been hitting our targets on, then go ahead and consider becoming a member. CryptoCache.tech is the site, link in the description below. I do also offer discounts for military and third world countries, essentially low income housing. So I look forward to getting to know you better. Have a great rest of your day. Thanks again for your time. We'll see you soon.